Good morning. It is Sunday morning, August 21st, 2022. This is Ron Brown. I'm going to do a short market report, and towards the end of it, I'm going to look at some stocks that are coming up in what I call my automatic watch list. So I'll try not to spend too much time on the market because a lot of people do that, and we really don't know what the market's going to do day to day, but we have to look at the evidence that is available. So, this is my standard risk disclaimer. Any stock, index, or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. If you don't use HGSI, you should, because it's the best program out there for total market analysis and prospecting. You can get a free trial at highgrowthstock.com. You can go directly to this link, or if you just go to the website, you should be able to find the trial offer on the front page. Okay, I have the software open to the warehouse view, but before I go too far, people are always looking for my add-on and so on, and if you ever do not have access to the add-on, or if I don't send out an email or something, just go to Member Services. Under the Help menu, Member Services, and it'll bring up this page. And just go to the Insider Club, and then there will be a PDF. And this PDF is whatever is current from the previous week, and the add-on is always linked in here. By the way, there are years of videos in here that you can review if you're a member of the Insider Club. Now, a lot of this stuff is out of date because I'm always adding to and changing the program to get the most use out of it. Once again, under the Help, go to Member Services and the Insider Club. Now, let's get back to analyzing the market. I'm using my starter version of the files, which you can find under the Help menu under the add-ons. This brings up this page right here, and these are the files that I'm using, not my full set of files, because there's a lot in there, and unless you're experienced with HGSI, it's too confusing. So just come in here. If you are taking the trial and download my zip file, click on that, and then you're going to get a message that it can't be downloaded securely. Just go to these three dots over here and select Keep Anyway, Save As, and then you can save the file. Ron's Basic F Filters, Views, and Combos. And then what you'll have is what I'm showing today. Now, I also have Gil Morales' installation in here, but I'm going to be working with my files. And under here, under the user groups, you're going to find the Starter Market Analysis user groups. I'm currently going into the Major Markets Plus folder, which includes the ETFs, and if I take the filter off, you can see that there are ETFs and the major markets both in here. I'm going to click through to the warehouse, reapply the filter, because I'm using this view, top-down analysis, major markets, end of day, and it eliminates most of the ETFs. So what do we have here? This is what the view looks like after Friday's close. Utilities are on top, followed by the industrials and so on. What I want to concentrate on is the index that I look at every day and send this image out. Now this chart you'll find under stock and ETF analysis charts. Under the market charts, it's 01. And why I use this is because I get a good snapshot of what's happening with the NASDAQ. Going to bring up an arrow here, point some things out. Here's where we are. That's a line. Let me make that an arrow. From the 52-week high and from the 52-week low. from the beginning of the year and so on. Here's the daily range where it closed at 6.48, down 2%. It gapped down 0.99 yesterday, and the volume point of control went negative. Accumulation is still positive at B, and you can see that up here. Dark green is A, and it's gone to B. We've been losing momentum with accumulation, of course. Bongo Weekly is still strong. That is an internal relative strength indicator. Bongo Daily has turned no as the market has turned down, and then here's the open, high, low, close, and so on. Notice, even though it was a really nasty day on Friday, that the volume is 8.9% below the 90-day moving average, which is this line, and the volume change was actually down from the prior day when the market held. So even though the market gapped down, or the index gapped down sharply, it was on light volume, and this generated a no supply sign of strength. The sentiment right now is neutral, and here you can see the volume was less than average. The spread was narrow and the close was down. Now here's the advancing issues versus declining issues, and the advancing versus declining volume, new highs, new lows, and then the ARMS index. Now, if I hit my alternate I key, it brings up this information. I can scroll down to the bottom, make sure I'm on the last day, and it gives me this information. Here's the decliners, here's the advancers. Get this back up here. Decliners, advancers, unchanged. Advancing volume versus declining volume. Even though the volume was light, the declining and advancing volume were obviously very much in favor of the declining volume. New highs were 30, new lows were 43, and the ARMS index indicated selling. So there's a lot of information in this chart, and this is why I look at it every day. Now let's look at another chart, number 2, which is the new highs versus the new lows. This is the NASDAQ composite. Also, you can see that it never did get above the 200-day exponential moving average, but it's above the other three, the 18, the 50, and the 100. You can see right here what's happening with the new highs, new lows. We were seeing several new highs, but this is reversed. The new lows have come up through the new highs now. And then this next chart is number 3. It shows the advanced decline line. You can see that it's been pretty strong with a series of higher lows and higher highs until it got up to this point. And now this would have to be considered a higher or a lower high and a lower low. So this has started trending down too, but still we have B accumulation. So all is not lost yet, although it was very painful on Friday for many of the long players. Now I'm going to switch gears. I'm not going to go over these other indexes here. What I want to do is I'm going to go back to my designer, and I'm going to go into a folder I call the Broad Market Indices. These are well, I'll use this one, the major indexes and sectors. These are indexes that are generated by HDS Investor using the stocks within these indexes. And I'm going to click through to the warehouse view, and now I'm going to change from this top-down process views for market analysis and go into the top-down scorecard views for HDSI index analysis, because these are indexes created by the program. Now you can see that these indexes were down. Every one of them were down on Friday. But look at this. Look at the lack of volume. The only one with above average volume was the small cap index, but the rest were down. Now I want to switch from number 1 to number 3 because this shows us the advancing versus declining issues. Utilities were down 2 to 1 approximately, and all of these other indexes, look at the SOX, every one of these were down. If I click at on the transports, that was 95. I'm sorry, 15 to 1. Here on the technology index, 10 to 1 down day. 0.10, it's 10 to 1 down day. 439 up, 42 down. So tremendous amount of damage done on this day. Let's just bring up this chart. And I'm going to move over to my stock and ETF analysis charts. I do not have my HGSI index charts in the starter group. That is in the full add-on, but I want to show you this, and let's just see what is happening here with the 3 and the 6. You can see the 3 did cross down through the 6, and the index is on the 18-day exponential moving average. If you're ever unsure what any of these lines or indicators mean, just hit your alternate I key, and you can scroll down here and see the different colors of the moving averages and so on, and the relationship to these numbers. Here's the percentages. And then it tells you if the 3 crosses 6, this is a micro trend right here. This is a short-term trend, and this is an intermediate-term trend. So you can see the relationship to that. All this information, alternate I key. So we're seeing a breakdown. We see this index, it bumped up against the 200-day exponential moving average, and it is running into resistance. Now, the thing that really stands out to me, in addition to these being extremely negative, on the advance versus the decline, or the advancing issues versus the declining issues, is the lack of volume. So what does this say? It says to me that there is not a lot of panic in this market yet. So I would like to see more volume to know that we're in a full-fledged panic selling mode, and I just don't see it yet. It doesn't mean that it's not going to go down, but that's one more confirmation I'd like to see. Okay, I don't want to make this video too long, so what I'm going to do is go into my user smart groups. Now these come with the installation, or most of them do, but I'm going to look at these instant watch lists, end of day bullish. Now these are created from filters that I built for the program, and it's a filter and combo ranking, and it pushes these to the top of the list because they meet the criteria. So if you want to see what the criteria is, you can click on this up here, go to the instant watch list, end of day bullish, bring this up, click on the filter. And this is a filter that I created for the undercut and rally, but it works so well for that I decided to use it on a lot of these smart groups, because it looks for any of these situations. If any of these VPA flags are showing up on the last day, or if any of these bullish candles are showing up, then it will pass this filter. Also, the fan has to be up. The 3 has to be above the 6, and so on. And this is it. And you can always come in here and click on preview and see how these different columns, see what is generated on these different columns. Okay, these are the bullish candles, and so on. And then you can just look across here, and it gives you a lot of information. That's how I build filters. Okay, so let's go ahead, and I don't really need to rebuild these since I didn't change anything. I'm going to transfer this to my daily prospecting scans, and I'll put it on end of day And let's take a quick look across here. You can see that Occidental Petroleum's on top based upon this combo rank, which is the percentage price change one day. And these are what I call the Wyckoff columns. VPA volume. Do that again. VPA volume, VPA spread, and VPA close. You can see immediately that Occidental Petroleum closed very high with a wide spread, and the volume was high, the close was high, and the spread was high, and it crossed the 13 crossed the 6. I'm sorry, the 3 crossed the 6 2 days ago. 0 being the crossover day, yesterday being the second day. Has an RS rank of 95, Kirkpatrick rank or 98, 95. It's outperformed the S&P by 10% over 5 days and 18% over 10 days. Here's the last close and the percentage price change and so on. Tells you what group it's in, sector, if there was a bullish VPA flag, and then you can look over to the right and see what that flag was, effort to rise. These are the, these are the same thing, effort to rise, but this is the actual VPA flag code in the program. So both of them are in here. Just so you can, if you want to learn which triggers, or which code I should say, it takes to trigger the signal condition, this is it. These are the, and these are what I put in the filter that I just showed you. So if any of these things occur, these stocks are going to show up, and usually there will be multiple things. So let's look at Occidental. I'm going to start with this chart. I think there was news on Friday. I wasn't around. I think it maybe has something to do with Warren Buffett acquiring more Occidental Petroleum or something. But you can see that the crossover, if I do an alternate one, it happened the day before, and then Friday is where it opened here, and then it took off. Effort to rise, but this warning up here is an upthrust signal, which means that with this very heavy volume, there are both buyers and sellers in here. So you're probably going to run into some resistance, and you can see that there is some resistance with this upper wick. But the VPOC went positive the day before, and the other moving average crossovers were all already positive. And look at these. Here was a low volume test, the confirmation of that test. Here's another low volume test, the confirmation of that test. So it went from expansion to a little bit of contraction, not much, and then it crossed over again and took off. But based upon this filter, and you can see why it appeared in the filter, because there's a heavy white candle here and a VPA flag. And the prior day, it would have appeared also because of the white candle. So let's look at Arch Resources. Now, some of these may be too far gone, but I'm looking for leaders here that may have some more upside. And remember, we had a very bad day yesterday, or on Friday, not yesterday. And looking at this, okay, no supply, test. Let's see what this is. If you look right up here, strength seen returning, I said test, but it's strength seen returning after a downtrend. Just click on any of these, and it'll tell you what the VPA flag here. Now this one, no demand, a sign of weakness because volume was light and it closed down in the lower part of the daily range. But we get up here, you can see the 3 crossing the 6 on this day right here. If I put a crosshair on it, that's on an effort to rise, and you can see that this has moved up nicely since then. It wasn't a leader at this point, but it would have been showing up in some of the pullback scans. Now, a pocket pivot also, expansion contraction, that means a 3 crossing the 6. The 6 had not crossed the 18 until the following day. You can see it went up here, and then it ran into some resistance with these upper wicks, but then on Friday it started to go again. Obviously, it becomes a higher risk trade the further you are from a base, but I'm pointing out here that these VPA flags often give us a great roadmap. Test for supply, another test for supply on Friday. Okay, I want to go down to, let's look at Ardmore Shipping. This is a leading stock, and I'm going to look at this with some different views. First of all, let's bring this up, and you can see that the 3 crossed the 6 27 days ago. The volume point of control crossed 11 days ago because there was a pullback here and then a rebuy opportunity. It's outperformed the S&P by 5% over 5 days and 14% over 10 days. It's still just a $10 stock. So let's take a look at some information on it. It was losing money until recently, and you can see it's a turnaround stock because these numbers turned from negative to positive, and you can see it up here in the graph. This is the red is revenue, the blue is earnings per share, and look at the revenue compared to the EPS. Next quarter, it's projected at 435%. So even on a bad day, this stock is holding up well. It's in the transportation shipping stocks. Let's take a look at a weekly. I'll just do an alternate W to make this a weekly chart, and you can see how strong it is. It's coming from the $3 range to the $10 range, so it's been a tripler. Now, I'll just move down to the next chart, which is a daily. You can see that most of these candles were bullish when it tried to sell off. That was price rejected, and it closed near the high of the day. A little spinning top here, but it is moving higher. And let's look at the weekly version of this. You can see that it's out to what looks like an all-time high. If I do an alternate M for monthly, it is at an all-time high. So alternate D takes me back to this. Now during the market day, you can look at this chart and it'll give you the information intraday. But I'm going to drop down here to chart number 8. These are both the same. One's a candle and one is a bar chart. And this is a comparison to the S&P 500, and you can see that it's outperformed over 1 day, beginning of the week, 5 days, 10 days, and so on. Here is the chart. Here's a chart compared. I'm sorry, this is the S&P up here. So the S&P has been moving up. Here's the stock, or the relative strength versus the S&P. This is the stock. This blue line indicates if it's outperforming or underperforming the S&P, and you can see that it's outperforming. And the dotted line is the group line. So it's outperforming its group over the past day because the group line's going down, but this is holding up. It's outperforming the S&P in a very weak market. This stock still looks very strong. The marine shipping group has done very well. Okay, I'm going to do one more and then end this. I haven't looked at these. We're looking together, so let's see. That's the one I just looked at, and you can see it was above average, and very high on this. Let's look at this one because it's above average, wide, very high. It crossed 42 days ago. The 3 crossed the 6, and the VPOC crossed 8 days ago. RS a 99 outperforming the S&P by a wide margin. Let's bring it up, and you can see that it is setting up again. It's outperforming the S&P, and it's well, the group was flat, so it's moving with the group. The S&P came down, but it's outperforming. Let's go back up here to the top. You can see where it crossed clear back here. And see this right here, alternate crosshair to look down at the bottom. This is where we had a pullback and then a gap up with an effort to rise. It looks like it's setting up again and could go higher. It's actually got earnings for especially pharma and revenue growth. So it doesn't look too bad. Anyway, my point is just by looking at the instant smart group, and I've got several instant smart groups. Uh, these are limited $75. These are pullback stocks. You can go through and figure these out, or we can or all discuss them in the future. But I don't want this to get too long. Let's just take one look at a pullback stock here and see what it looks like and what it means. NuScale Power Corporation, you can see that it had a nice run and it pulled back because the 3 went below the 6. It's setting up again. If I drop down to chart number 4, which is an undercut and rally, you can see there's 2 accumulation days here with a light green line. If this crosses over, the 3 crosses over to the 6, this will turn into a dark green line. This is what I mean by end of day pullbacks. Okay, I'm going to end it here. It went longer than I wanted, but I wanted to get something out to you for the weekend to show you what you can do with this powerful program. Have a good week.